of best practice, and then from there only each and every single accounting standards are growing. So IAS 1, if I take example IAS 1, IAS 1 is presentation of financial statements. How I should present my financial statement, it is in detail discussed under IAS 1. At a situation at that time, let's assume we need to have an accounting standard for cash flow statement. We assume that time we don't have, just for the sake of example. Then we get to refer somewhere from where we can develop this. That referring focal point is what? Is that? Yes. I hope I'm making myself very clear with this.
It's like a blueprint.
Yes, exactly. It's like a blueprint. From there only, we will then develop single each rooms and halls and veranda, everything. So every single accounting standards are developed based on framework. But one thing, if I to compare an accounting standard with a framework, please remember, always accounting standard supersedes regarding the matters discussed in that accounting standard. If any disputing situation coming with framework, then always accounting standard supersedes. Accounting standard has the upper hand. Clear? Fine. So, in the previous sessions also we talked about this, are developed from this framework only. It will give you reference as to how best you should report your financial statements. When you submitting or presenting your financial statement to your users, your readers, how best you could refer in arriving the financial statement, that will give you this generally accepted theoretical principles. There are various principles that we will be discussing, that is developed in order to support the robustness and integrity. Now, you see, if someone is coming with saying that, okay, look, this is accounting standard, first of all, you need to see who is telling this. A man walks on the road, comes up with a new standard, IFRS 85. Will everybody believe him? No one going to believe him. First of all, you go to see what is his background. Same story. So, we have to base our development of accounting concepts based on the framework. There are certain conceptual framework or elements which needed to understand. You see these those three methods: recognition, measurement, and disclosure. We need to understand all this. I'll pick an example. Let's say purchase of a photocopy machine or leasing of a photocopy machine for next 3 years from a photocopy machine supplier. And they also said, after sales for the next 3 years, the service is entirely free. This is the arrangement that nowadays I hope many of you may have come across. You don't need to buy the outright purchase of these machines. They also rent it. So this is another point to discuss. Now, okay, now let's talk about this situation. You pay, let's say, $28,000 or reals to buy this machine, and they say that we will give you 3 years of total maintenance free for the from the date of purchase. Now we need to think about the recognition, measurement, and disclosure with regard to this transaction. These three important concepts are really plays a pivotal role when we produce our financial statement. First is recognition. Now, at which point that you, now if you think about from the point of the photocopy seller, from their point of view, Almana photocopy or a technology company, assume like this. Now in their books, they need to show sales, correct? Yes. Now in showing the sales, at which point that they can say that okay, this is my sales. I'll give some different dates. On 25th of December, one of the representative from the buying company visited Almana and then made an inquiry. In one situation. Second situation, on 28th of December, the Almana company has issued a document detailing about this photocopy machine. On 3rd of January, the buying company issued a purchase order. On 8th of January, the photocopy Almana delivered the machine. On 12th of January, then they have issued a check for this payment. Now we need to find out at which point that I should recognize this as a sales in Almana. What do you think?
Date of delivery. Sold. Already paid.
When paid?
Date of delivery.
Date of delivery.
No,
what is the principal question you will ask?
The printer is already paid from the Almana.
Yeah, that is one example way of thinking. I need you to think from a theoretical way of thinking. See, you got to ask a question when the risk and the rewards and the associated risk of this machine transfer to buyer at which point?
When they issue the check.
No. Payment.
That is just a payment. Now it could happen other way around also. You could make a payment in advance. Now see, now they issued the LPO. Could that still be they are legally bound to buy the material, or they can say no?
No, still no.
They can say no, right?
Yes, sir.
There is no harm in that. Then they send the delivery.
Okay.
Now in delivery there is two questions you need to ask. Who is taking the delivery? Is the seller taking the delivery or the buyer is taking the delivery?
It depends.
Yeah, you go to ask that question. Now based on who is taking the delivery, then you have to ask the question to the rewards or the benefits and the associated risk is transferred at which point. Now you put the machine in the lorry is on the road, there is an accident, the machine gets damaged.
Yes.
Who will bear the responsibility for this?
Insurance.
No,
Insurance of who?
Insurance of who?
Insurance of who?
The delivery. Who made the delivery?
That's what, now let's say.
Delivery company.
Still the company.
Hmm?
Still the liability of the company.
Who, the seller or buyer?
The seller.
Seller. Depends. Again,
Depends.
that also depends. Now there is also, you would have come across
Depends on
CIS.
agreement. See, if it's C, it's totally different.
Yeah.
If it's C, if it's landlord, yes, it's a buyer, the seller. But if it's C, there is different kind of
Arrangement. There is something called
CIS.
CIF, there is something called FOB. This all comes into discussion. So we now here at this point of time, we don't need to complicate ourselves. We just need to ask the question, how I recognize this transaction. Once I am satisfied with the recognition only, I start make the double entry. We discuss the double entry. We debit somewhere and we credit somewhere. I debit machine account and I credit the Almana printing company as a payable. That point when I committed myself, this machine is for me. So they may also say example, a typical example is the TV purchase. You go to Lulu and then you shop around all the TVs over there. Can the Lulu record sales? No, they can't record sales. Again, next day, he goes with his wife, again they do another round of viewing. Yet, no such sales can be recorded. Then they book one sales officer or salesman there, and they eat his time. How the color is okay, and OLED and 55-inch smart curved TV, everything is discussed. Yet you cannot recognize the sales. So there are several key milestones. You got to understand that. So first point is recognition. Fine, we recognize. Next point is